When leaders announce sanctions, the headline is rarely the whole story. The question is, who designed the incentive, who cannot afford to walk away, and what option still looks rational on each side? Today we read this move as strategy, not as a morality play. You're seeing two separate headlines: AI stocks sliding while energy prices spike due to rising tensions with Iran. Mainstream coverage treats these as unrelated events, one about an overvalued tech bubble and the other about geopolitical fire. This is a fundamental error in reading strategic incentives. The reality is that modern artificial intelligence relies on cheap, stable power. When friction spikes in critical corridors like the Strait of Hormuz, energy costs rise and stability drops. This directly threatens the return on investment for capital-intensive data centers. Investors are misreading this correction as a bubble burst rather than acknowledging it as a strategic resource constraint. The market is not punishing AI technology, it is pricing in the physical reality that war makes compute expensive. To understand why smart money is exiting now, we must look at the structural link between energy and computation. Artificial intelligence infrastructure does not run on algorithms alone, it runs on massive amounts of uninterrupted electricity. A data center is a factory where power is the primary raw material. When geopolitical friction rises in regions that control global oil and gas flows, operational costs for these facilities jump immediately. The logic follows that if you cannot guarantee cheap power, your profit margins evaporate. This creates a direct threat to the valuation models used by Wall Street. Investors are not suddenly deciding AI is useless. They are recalculating the cost of doing business in an unstable world. When energy becomes scarce or expensive due to conflict, the ROI for compute-heavy operations collapses regardless of how advanced the code might be. Quick resource note: I keep a curated set of Amazon search links in the description for books, gear, and tools relevant to this channel's topics. Some are affiliate links, so I may earn a commission at no extra cost to you. Please consider supporting the channel by using those links if you find something useful. This market correction mechanism is driven less by company fundamentals and more by a shift in firm-specific investor sentiment. Research from the Annals of Operations. Research establishes that higher positive sentiment regarding future growth increases the likelihood of a stock collapse when those assumptions fail. In this context, the assumption was stable energy costs forever. When geopolitical friction spikes, it alters this sentiment instantly. The sell-off is not about whether AI works. It is about the failure of the underlying infrastructure to deliver reliable power at the projected cost. This triggers a rapid devaluation that looks like a bubble burst, but is actually a reset based on new strategic realities. The behavioral dynamics among investors further amplify this crash, creating a feedback loop where cognitive limitations reduce potential earnings significantly. A study by Naito and Shirado demonstrates that over 40% of individuals treat AI as an authoritative predictor without questioning external variables. This leads them to narrow their view of viable futures. When those predictions fail because energy costs spike due to war, the financial impact is severe. The data shows a 53.76% reduction in potential earnings for participants who narrowed their decision-making based on such predictions. In market terms, this means that investors relying solely on growth narratives without considering geopolitical shocks are blindsided when reality intervenes. They were not prepared for the shock to supply chains or energy grids because they assumed stability was a constant rather than a variable subject to strategic competition. The stakes of this dynamic extend beyond stock tickers. They touch the core reliability required for both commercial and military applications. Analysis from the CSIS Futures Lab highlights that AI adoption in conflict is not just about algorithms but evaluation under chaos. The primary bottleneck in AI adoption isn't code, it is energy stability. If war breaks energy stability, reliability fails regardless of how smart the software becomes. This invalidates current valuation models based on stable power assumptions and forces a re-evaluation of what constitutes a viable asset class. When leaders announce sanctions or when conflict escalates, they are signaling that the physical foundation of the digital economy is under threat. The market corrects because it finally recognizes that geopolitical friction can disrupt the flow of electrons just as easily as it can block ships in a strait. This reframes the viewer's understanding of volatility from a story about greedy tech companies to one about resource scarcity and strategic competition. It explains why smart money is exiting now, not because AI doesn't work, but because the energy foundation required for it is becoming too expensive or unstable due to realpolitik forces. The connection between Iran and Silicon Valley is direct through the price of power. When you see oil prices spiking in response to regional threats, you are seeing the same force that will eventually drive up electricity bills for data centers worldwide. This creates a hard ceiling on AI profitability until energy security can be restored or alternative supply chains established. The odds increase significantly for investors who ignore these structural constraints and continue to treat AI as an isolated technology sector. Participants treating AI as predictive authority were significantly more likely to skip guaranteed rewards, with the risk increasing by a factor of 3.39 when they failed to account for external shocks. This is not just about losing money, it is about misreading the incentives that drive global markets. The narrative of a bubble burst ignores the reality that we are facing a new era where physical infrastructure and geopolitical stability dictate technological value more than software innovation ever did. The strategic conclusion must be clear. Reliability is now the primary currency in this market. If energy grids are destabilized by war, the reliability required for both military and commercial AI fails. This forces a reevaluation of what constitutes a viable asset class in an era of great power competition. The market correction we see today is not a sign that artificial intelligence has failed. It is a signal that the world's strategic environment has changed faster than investors were willing to admit. Thanks for watching all the way to the end. I am a one-person team working hard to make each video better than the last. Subscribe if you found value. It is the best way to show support. Drop a comment with your biggest takeaway. See you in the next video.